Don't sleep, man. Stay woke, man. This right here got to do with some money.
This morning, the government is deploying emergency measures to stop a potential banking crisis, including the takeover of another regional bank, Signature Bank of New York, just 2 days after regulators shut down Silicon Valley Bank, the second largest bank failure in U.S. history.
Hey, this is crazy. They are shutting down banks. And from what I understand, I ain't watched this video yet, but from what I understand, the FDIC that kind of backs the banks, that right now they don't have enough money to cover what's in banks. So money is not insured. It's insured up to 250,000, I think. So I'm good. You know what I'm saying? I'm good. I'm insured. But if you got a lump sum in the bank, you might want to find another way to do this right now, because they're going crazy.
I think that without this, there could have been some serious runs on other banks because there would have been a loss of confidence throughout the whole system.
The Federal Reserve last night announced clients at both banks will get access to all their funds when branches open today, not just the $250,000 insured by the FDIC. Treasury Secretary Janet Yellen insists this is not a bailout because the funds are coming from a pool of money paid into by Wall Street, different than the taxpayer-funded bailouts of 2008.
This is not a bailout.
So if you don't know how banks work, this is just a quick little class real quick. So you put your money in a bank. The bank takes your money and put it into the stock market. So they triple your money, quadruple it, 10 times it. They put it in stocks, bonds, CDs, whatever they can put it in, and make money off your money. And so when you go pull money out, they have to wait until the stock market, fluctuates in order to still get their profit. That's why if you go to the bank and you got $1 million in there, you can't pull $1 million out. You can't pull $1 million out. You got to wait. You got to wait some days, weeks, maybe months before you get that money out. So stay woke, man. Stay woke, man.
This is a change of policy, yes, but the FDIC's funding does not come from taxpayers. It comes from the banks, the big banks.
All the turmoil began last Wednesday when Silicon Valley Bank, a large lender in the tech industry, tried to sell assets to boost its balance sheet. That panicked investors and customers raced to withdraw their money after seeing the news on social media.
It's a confidence game, and social media can destroy confidence very quickly. Twitter was just ablaze with concerns about what was going on here, and that creates a wildfire situation.
Senator Bernie Sanders blames Silicon Valley Bank's collapse on successful Republican efforts in recent years to relax regulations on small and medium-sized banks. As for
So people, look, check this out. People went to Silicon Valley Bank. They got money in there. Silicon Valley Bank, you got people that stay in Calabasas, your actors, your big time Drakes, and all these people, probably had their money in here. But they went to the bank this morning or yesterday morning and said, I'm finna go buy a Lambo. Went to go pull out 500,000 and it ain't there. You got 10 million in there, but it's only 250,000 available. Yeah. I bet you, boy, the suicide rate gonna go up, because that's crazy.
Signature Bank, the reason for its collapse remained unclear overnight. Many of Signature's clients are in cryptocurrency. Over the weekend,
you hear that? Now, if you know finances and you know cryptocurrency, right now, Bitcoin down, ETH down, all this stuff is down to its lowest it's been in years. Went from 50, 60,000 per Bitcoin to 20,000, 10,000. It was down to 10,000 not too long ago. The banks collapse, cryptocurrency go up. Stay woke.
Uncertainty spread to another regional bank, First Republic, because of its similar profile to Silicon Valley. Many customers concerned.
Trying to figure out if this is the best place to hold our money.
But overnight, First Republic said it secured funding from JP Morgan Chase and the Federal Reserve. In the meantime, experts say the emergency program announced by the Fed should be enough to calm financial markets and prevent a domino effect.
Each case is different. I don't think this is anything like 2008. I don't think we have to worry about that. We don't have contagion in the financial system itself.
JP Morgan Chase and PNC are.
Of course they're going to say that. If the banks is collapsing, why would I tell the whole world that the banks are collapsing and your money that you worked hard for is gone or it's not insured? Come on, man. Stay woke, man. I want y'all to stay woke, man. Get your money, move your money, buy you some crypto, buy you some property, buy you some paintings, some art, some stuff, some assets. You know what I'm saying? Move your money around, because these banks, man, they looking kind of shaky right now. They looking kind of shaky. Stay woke, man.